What's up, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's happening with SPY, Tesla, Nvda, the QQQ, and a couple of other tickers. And break down what's happening with the overall market moving forward as we have more data coming out for tomorrow that's very important, not to mention new developments on the charts. But just note that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $1,000, you're guaranteed 15 in total. And the offer ends very soon in just about a couple of weeks. Anyways, for the market, I just want to mention that as far as the market's going, we're holding a nice range right now on SPY. We're seeing some buyers trying to defend this 550 area, and we have a big sum of data coming out for tomorrow. It's going to affect whether or not we lose these key supports. But let me give you guys my general view of the markets. I think that over the next couple of weeks, the market will eventually come down to fill a lot of these gaps. We have this big gap to fill in the 543s for SPY, not to mention another one all the way down to 530s. I think there could be more downside coming for the markets over the next couple of months. Now, I think that also the market's going to most likely bottom very soon, right before the election, maybe a lot before it, maybe like in mid to late October. And then we're going to be looking for a big monstrous run again. I think history is just repeating itself. We're going to see something very similar to this, except over a longer period of time. So that's what I think is going to happen to the markets. So that's my general view over the next couple of months. But whether or not we get these gap fills on a day-to-day basis depends on so much data. So it's very difficult to predict how long it's going to take to get those gap fills. So that's why I just want to focus on the shorter term projections of the market and just talk about some data first before I break down more details about these charts. So today we had a very, very interesting amount of data that came out. We had the jobs numbers that came out, and we had the lowest amount of job openings since January of 2021 for the economy. So with that happening, there were people out there who were maybe concerned about this. The market actually pumped once this data came out because this would incentivize the Fed to cut. So I think the market really liked that. At least it has a different interpretation of this. And the lesson to take away is even if we get bad data, the market could still pump. If we get good data, the market could still dump. It's not just about the data, but it depends on the interpretation the market chooses to use. And the market moves in a way where all this data is noise. It's just noise that's outside of the algorithms. And they use this noise, they use these data releases to cause volatility. They use this for their own intentions, whatever benefits them more, and for many different reasons like that. But that's like a very simplified version of what's going on. So I want to make it very clear that's the reason why I'm always talking about data. Watch for data when this release comes out and this and that, because that's what drives the markets and that's what's used to cause more volatility. So for tomorrow, it's going to be Thursday, September 5th, 2024. 1 hour before the market opens, we have initial jobless claims coming out and then continuing jobless claims. So expect some volatility an hour before market open, but that's very, very minor. The main pieces of data will be coming out around here. At 9:45 a.m., we have the S&P Global Composite PMI and Services PMI reports coming out. This may cause some volatility, so watch for that 15 minutes after market open. And then 30 minutes after market open at 10 o'clock a.m. Eastern Standard Time. This is when we have the main piece of data of the day. This is when I expect the most volatility. We have the ISM services data, which is very important for that whole sector. Services make up a big part of our economy, so I'll be watching to see what this ends up looking like. We have the services PMI, business activity, employment, new orders, and prices all coming out. New orders are very important because it's going to give us a good amount of forward projections for the data. And then prices will give us more data for inflation. So look for a high amount of volatility tomorrow at 10 o'clock a.m. Whether we get a rally or not, we're going to be very, very careful. And then besides that, we have some bill auctions coming out at 11:30 a.m. Besides that, that's pretty much it, at least for the market moving forward. But there's going to be quite a bit of volatility tomorrow, especially at 10 a.m. So be ready for that. Right now, with all the data that came out, the market thinks there's a 55% chance we get a 25 basis point cuts and about a 45% chance we get a 50 basis point cuts. So what's been happening is, especially once we got the jobs numbers, which were very poor, the reason why the market pumped was because this number right here, this started going down a little bit, and then this one started going up a little bit compared to yesterday. Why was this going up? Because the market was thinking the Fed is more inclined to cut now because of the fact that the labor market is contracting. And that's what Jerome Powell said. The Fed is now watching over the labor market. If things start getting really out of hand, they may be incentivized to cut more. That's why the market's adjusting to this, and that's why we're going to be looking for a big reaction tomorrow. For earnings, we saw Dick's Sporting Goods this morning. They did relatively well, beating on EPS and revenue and guidance. There's not really much coming out. We have Neo announcing earnings tomorrow. Then we have Big Lots and a few more retail after the market closes. before market open on Friday. Besides that, we have the fear and greed index currently at neutral. We're kind of in the middle right now as the market is getting ready for its big move. Momentum is currently at fear. We're not extremely fearful, but we're more in favor of fear. We're still kind of trending downwards. That just shows that the market's losing some strength. And then the puts and call option ratio is currently at fear. Fear is making up the majority of sentiment now as we're seeing more puts being bought. More shorts are continuing to pile in as the market starts to hold up. The VIX got a nice push today. It did dip a little bit, but so far it's holding up nicely. And this is a sign that the market is once again beginning to slow down. So the question is, what is my prediction? Like I said before, guys, for the end of September going into like October, I think there's going to be a lot more downside coming, and we're going to be filling a lot of these gaps. I think that's going to most likely happen. And I think that the market is going to present a buying opportunity because there's going to be another rally for the end of the year, especially after the election. That's what I think is going to most likely happen. Now, that is just my prediction for the next couple of weeks. What about for tomorrow? And that's going to depend a lot on the data. So, from what I'm seeing, basically, SPY is trying to hold this 550 area. This is going to be our key support right over here. Notice that 550 is our support, and we have this resistance to watch for at around 552. That's our 20 EMA, followed by 553. If we break that, I'm looking for 555. So I'll be watching to see which way we end up going. If we lose 550, we're looking for support all the way down here at 548. If that fails us, we're going all the way down to 546, then 543. If we're bullish, we want to break past 553 and eventually 555. What I think is going to happen is this. It depends a lot on the data, but I think that we're going to eventually be coming down to the 543 soon. I do think there's going to be a move down coming, but before that happens, we'll see if we get one more pump off the data. There might be another push attempt coming before we attempt to see that low. I think there's still a strong possibility of that potentially happening, and we could be looking for a pop and drop like move. When we come down to 543, it could take a couple of days to get there. So we'll see if we get an initial pump tomorrow before anything else, but it depends on the data. So I'll be watching that for now. But otherwise, SPY is just kind of range bound, so give it some time. There may be another attempt to kind of pop a little bit as we have a double bottom forming here for a nice bullish reaction before we see another continuation lower. I think that's the most likely possibility. For Bitcoin had a bit of a dump only to end up seeing a bounce. So with this inverse head and shoulders right here, we might see a little attempt to bounce on Bitcoin for that 59,000 target. But even if we hit 59,000, we could still see a rejection on Bitcoin because the 4-hour is still showing weakness with this head and shoulders like structure. So even if we do rebound a bit, we could be testing 59,000 only to reject and start dipping lower. So watch and see if that ends up being the case. We could just rebound and start dipping. Watch for that. For others out there, such as Nvda is looking a little bit weaker as well in terms of the overall trend. I think ultimately we will end up reaching the 90s again, like 97, 98, even below that. But for now, before we go all the way down to those low levels, there might be a little rebound attempt. We might retest 107, if not 110 again, maybe even a little bit higher before we continue to dip lower. So that's what I think is the most likely possibility. Watch 104 is key support. If we lose that, we're going back down towards the 99 area. If we break 110, we're going to be looking for a push for 114. I think we might rebound to 110. We could try to break it. We'll have to see about that. And then we will be making a move right back down. And I think there's more downside coming. So look for a pop and drop as the most likely possibility. That's what I tend to favor. For ES, for futures out there, I think what's going to happen is we're going to be coming down to fill some of these imbalances. I think the daily is going to be a lot more useful for ES because I'm seeing some interesting trends. So on the daily, ES is starting to dip towards this 50 EMA over here. The 50 EMA is at this 55.13 area. If we lose that, we're going to be going down to about the 54.80 area, followed by much lower levels. That's going to be a very, very important support. So watch our 50 EMA. Resistance, watch the green line above. So the green line, which happens to be around the 55-59 area, that's going to be resistance. I think that we're just range bound for now. That was like what the range was for today. So we have 55.60 as resistance and 55.20 as support. I think we're going to be going back and forth for some time, but eventually there will be a move to the downside later on down the line. Tomorrow, if we do rebound a bit, it's possible we just continue to consolidate, test upper resistance, but then later on down the line, whether it takes a couple of days, another week or so, there might be a dip coming. So I just want to call that out. For SPX has this big gap to fill down here. I presume what's going to happen is we're at gap support. We could, just like ES, try to rebound for that 55.40 retest, but then we could eventually dip down to fill this gap, taking us down to the 54.60 area. So I think we will come down to fill this gap. We might rebound a little bit first before that ends up happening, but SPX does look more bearish. For tomorrow specifically, it might rebound a little bit and just consolidate, but over the next few days, if not a week from now, I think we're going to most likely come down to fill that gap. So that's what I'm favoring, at least for the time being. For others out there like Tesla, Tesla's looking quite interesting. It's actually holding up very nicely on the daily. And this is outperforming the markets. We had some good news come out involving Chinese sales and the new potential model variant. So there's an inverse head and shoulders forming here. Tesla needs to try to hold above 220. If we break through that, we're going back up to 222, then 225. If we lose 220, we're looking for 217 to be retested. And then if that fails us, we're going back down towards 213, back down to these EMAs. With the inverse head and shoulders, okay, and such a bullish day, usually what might happen is we dip a little bit, but then as long as we hold above, that 215 area, as long as we try to hold that, there could be an attempt to get back above 220. If we could hold above that for a couple of hours, I think we're easily going to be pushing back even higher. So might be a little bit of a dip on Tesla, and we'll see if we hold support at 215 to try to bounce higher. And there's a good chance it might try to push with this inverse head and shoulders. Tesla's building some strength. It's looking pretty good compared to the market. So we'll see how things go. For NQ, it's been dipping a little bit. We have this big red bar that's been forming here. So I think that ultimately we will be revisiting this previous resistance becoming support around 18,500. But before going straight down there, what might end up happening is we rebound a little bit. So we could try to push a little higher for the lower 19,000s before we see a big rejection and a dip. So I'll be watching to see if that ends up being the case. But look and see if we get a little rebound, then we continue lower. So watch and see if that ends up happening. For the QQQ, I think that the QQQ will come down to fill its next gap. Let me show you where that is. On the daily time frame, we have this gap to fill down here on the QQQ. I think we will be pushing all the way down to 450 very soon. However, we might not just go straight down. We might see a little rebound attempt first. We could be retesting 462, if not 464, beforehand before we see that big rug pull. So watch to see if you get a little rebound or not. Also, on the 4-hour time frame, I just want to call out that we're kind of range bound. We have 460s our key support, and then if we lose 460, we're looking for 458, followed by 453, and we have resistance up here around this 462 area, not to mention 465. So I think what's going to happen is we attempt to rebound a little bit. I think that's the most likely possibility, and then we just continue to dip lower all the way down to these lower levels. That's what I find to be the most likely possibility. For others out there, I think that Aapl has a very similar trend. What's good about Aapl is we're holding 218 R200 EMA. If this holds, we're looking for 222 and then 223.8 as resistance. Our support's at 218. As long as we hold that, we could rebound into the 222s just temporarily, and then we could reject and start dipping lower later on. I think that's the most likely case for Aapl, but as long as we hold 218, there could be a counter trend move. One thing worth mentioning about Aapl is we have a lot of gaps down here. There's quite a few gaps that are still left over, at least for the chart. So I'll be watching to see how that ends up developing for it. But we'll see if this kind of like slanted head and shoulders like structure plays out. I presume that Aapl will dip lower later on. We might start off with a little rally into the like 222 area or so before we continue lower. So watch and see how things end up going. With that being said, let's focus now on the rest of these. We have Palantir, which just came out with another green day. It's holding up decently, but I just want to say I'd be very careful with this nonetheless because we're still starting to downtrend a little bit. We have resistance to be watching for at 30.8, and we have support at about 28.5. I wouldn't be surprised if we retest 30.8 and start dipping lower. That's the most likely case as we have kind of like an inverse cup and handle. So look for a little rebound and a continuation lower as the most likely possibility. For Supermicro, we have a bearish structure right now. We failed to break past our key resistance. So we're going to be looking at these levels right here. You guys can see how well it's been holding in between them. We have 430 as our resistance. If we break that, we're looking for a move to 440. And if we reject off 430, we're going to be likely dipping close to 400 again. With the current trend, I wouldn't be surprised if we rebound a bit and we try to push for 430. We may even try to fill the gap closer to 440 for a little bit of a bounce. Then we may continue lower after that. And then we could be dipping back down to 400 as we look more bearish. Made a high here, we came down, made a lower high, came down, might come to make a lower high, then continue lower. But I think we ultimately will be dipping towards 400. For Rivian has been trying to rebound just a bit. We have resistance to watch for at 13.63. Our main support's all the way down here where this gap is. So I think what's going to happen to Rivian is there's more downside coming. This looks like a bear structure. We have kind of like a inverse cup and handle. And then we have these imbalances to fill down here. So I think what's going to happen is we attempt a rebound. We could attempt to get up to about 13.5, then continue lower, and then we might be tipping down to fill this gap into the 12s. I find that that's to be the most likely possibility. For SoFi, we have a head and shoulders like structure right over here as well. Notice that we were holding this white or yellow trend line right over here as our support, and then we dipped below it only to retest and then reject. So that's a sign of weakness. To be bullish, you want to break past 7.8. To be bearish, you want to see it continue to fail at 7.5. It's looking like we have a head and shoulders and a rejection off our trend line. So that tends to favor a downside metric. So I think what's going to happen is this is our retest rejection. We have like a head and shoulders here. I think SoFi might start dipping down towards the 200 EMA, towards 7.16. For the IWM, Russell 2000 is once again looking a little bit more bearish. The reason for that is because we're barely holding 212. If 212 fails, this will be dipping all the way down towards 208. And if we hold this, we'll be looking for 215 as resistance. In my opinion, it's looking kind of weak. I think we could be losing 212 to start dipping back down. And this imbalance down here might be taking us all the way down to 208. So I think there's a good chance of that potentially happening. I think we look a little bit more bearish on the IWM. For AMD, we're making lower highs right now, looking kind of bearish. We need to reclaim 146 to turn back up. It is possible we push a little higher for 143 to 146 tomorrow, but then there could be a rejection coming for us to continue lower as we're making lower highs. One thing that's very important to do is to look at this trend line right over here as our resistance. So if you look at this just like this is kind of like our resistance area. Depending on how you draw this out, but I just want to say that if we don't break through this, we might just push a little higher than just end up dipping back down lower. And this could end up leading this trend to remain more bearish. So I think that's the most likely possibility. For ARM is looking a little bit more bearish off this double top. We have resistance at 125, and we have support all the way down here around 117. I wouldn't be surprised if we rebound a bit, then continue lower, and I think we will eventually continue to fall as the chart looks more bearish, all the way down to 115. Coinbase looks a little bit more bearish. We attempted to rebound only to reject. So when you really zoom out like this, you guys can see we're barely holding the 161 area. If we lose that, we could be dipping all the way down towards about 155 and eventually 160. I'm going to be watching those levels very carefully. So for now, what I would say is I'm looking at where this wick was. So right here, this is where our support is on coin. If we fail at 161, we're looking for 160 and eventually 155 as our next targets. And the resistance I was watching was like right over here around 167. So I favor that we're going to try to rebound a bit, then continue lower. But I think we're not done with the move to the downside yet. There's likely more coming. For Amazon, we have this high up here. We came down, made a lower high. This is starting to look a little bit more bearish because of that. And if we see a bearish continuation, we're going to be looking for a move all the way back down towards the 170s. If we break past 174, we're looking for 178. And if we continue to fall, we're looking for 170 flat. I think that this is a high here. We came down, made a lower high. We may continue to dip all the way down towards 168. That's the most likely possibility. For Meta, we have a bearish divergence double top leg structure as we're dipping. We're looking at resistance around this 516 to 518 area, and then we could be dipping down to about 506 from there. So there's a good chance we dip lower, but look and see this rebound or retest of 516 to 518, and we'll see if we reject. Every time we've seen these rallies on Meta, we're rejecting, so it could rebound a bit then reject. So watch for that very carefully. For Microsoft, we're making lower highs right over here. So I think that we could be pushing for the 412 to 413 area, then continue lower. That's looking very probable to me. I think we might push a little bit higher into this resistance and we'll see what kind of reaction we get. For Google, we're all the way down at support right now. We are barely holding the support around this 158 area. So I wouldn't be surprised if we see a little counter trend move for a retest of 160. Then we just consolidate for a bit, but then eventually I do think we're going to be dipping below that to get to the low 150s. I think there's more downside likely coming. For just a couple more, we have DJT. This is currently on a big downtrend right now. We're now at the 17.25 area. We could continue to fall all the way down to 15. The VIX is on a breakout. We got a nice break from here, and we may continue to push from here if this continues to hold up. So we'll see. We'll see if the VIX dips a bit, then continues higher. It could be because the market may pump a little bit before it continues lower. But ultimately, I think the VIX is bullish. The 10-year is going to be affected by the jobs numbers. After the data came out today, we saw the 10-year dip because the Fed is once again expected to be a little bit more dovish. And then the dollar came down just a little bit. But despite that, we could still be forming a giant inverse head and shoulders. This could still break out later on. So If the dollar were to dip a little bit lower into the low 101s, just know that we do have strong support between 100 and 101, and this could still bounce later. With this potential dip coming, that could be because the market is going to pump a little bit higher, and then if we get a big bounce off the inverse head and shoulders, that could be because the market is about to get a rug pull. So you want to be very careful with that. That could signify a pump and dump that's coming to the markets. So we'll see how things go. With that being said, I thank you all so much for listening. The market is once again bearish overall, just temporarily. We could see a little rebound depending on the services data coming out for tomorrow. But ultimately, I still think that there's more downside to come, and we still have a lot of gaps to fill on SPY. With that being said, I thank you all so much for listening. Have a great day. Enjoy your day, night, or evening, wherever you guys are around the world. And I'll see you guys very soon. The next one in just another day. I'll be back tomorrow morning to talk about initial jobless claims and the data that's coming out. So I'll see you guys tomorrow. Take care and peace out.